We just discussed with Gurmeet. Vikas Khemani is with us, founder of Carnelian Asset Management Advisors. Vikas, good to have you back on the program. Thank you for your time. Defense, let's just start with that. Why not, right? I think let's get your views, Vikas. It's of course. I mean, it's the theme is great. It's multi-year. Orders are lumpy, and I think we covered quite a bit with Gurmeet earlier. But where are stocks at now? If you've given this a look, your team and you, just your perspective on the space and stocks.
From a long-term perspective, it is definitely an interesting space to look for. And my own approach towards something like this is whenever there's a euphoria, I kind of try to stay away because I think in these times everything goes up, good, bad, ugly, and one tends to forget the real risk reward of investing, be it any sector. So I think just because we recently had a conflict does not mean that suddenly all the companies will start growing at 30-40%. Right. Of course, it can marginally improve the environment, and defense has been a good opportunity, and directionally speaking, even last couple of years. And we saw how when markets corrected, they corrected far more than rest of the space. So I feel given very limited set of opportunities, company in that a lot of excesses have got built from a risk reward perspective, and one has to be careful. And I'm not passing this comment across the board for all the companies, but there are. By and large, this is a sentiment of the sector. So definitely looks good, but there are companies one has to see from a risk reward point of view, and one has to be cautious and careful, and then approach that.
So don't buy defense at these levels. But is defense a part of your portfolio?
We own some companies, but we are not buying anything fresh. We've been holding for some time, but we aren't buying anything fresh.
What are you buying fresh then, Vikas?
I think nothing has changed for us, to be honest. We've been through this whole crisis. We've been kind of believer in India's story. India's story has not changed. We've been believer that this whole year markets are saying corporate earnings will be subdued. But my view is that 25-26 corporate earnings will be very, very, very good. And if you remember from our last conversation, and I said that the last year liquidity was squeezed in the system. This time around, we are in an environment of reasonably good liquidity, and that is likely to be so. And that has a huge impact on the entire, corporate profits earning cycle. I think demand environment is reasonably decent. Interest rates are looking down. So, usual, we are quite overweight on banking and financials. Through the fall, we kept on buying them. We are quite bullish on the entire manufacturing space. We don't think anything is changing in that, despite all the noise around tariffs and non-tariffs. We don't think, sort of anything is sort of changing. Even IT, we've been quite reasonably. In fact, through the fall, we added some stocks. So I think through the fall also, so lots at times, it swings on one side and noise kind of clutters the sort of segment, and that's where the opportunity comes. So I think we have not made any major hypothesis change around India's story. I think everything remains same, except the fact that in this year, early part of this year, we were adding a lot more banking, which is significantly overweight for us.
Okay, all right. Hi, Vikas. Good afternoon, and good to see you. When in the past, you've spoken about how bullish you are on the CDMO segment, from the pharma vertical. But I'm just looking at the past quarters, shareholding, and a couple of stocks you've added from the diagnostic space. I see Suraksha, you'll have gone ahead and added on to whatever you'll had. Amrutajan Healthcare as well is another one that you'll have gone ahead and built a position. Tell us a couple of stocks, if you can, where you're quite bullish and you believe that it's at that inflection point.
It will be very hard for me to comment on a stock specific, as per the compliance. But in general, we've been bullish. I mean, both the names you mentioned are not part of CDMO, but CDMO is a big opportunity. And, we've been quite overweight for some time now. We have not added anything recently, but we've been owning it for last 1.5 years, very large position, and they've kind of done well.
Right, Vikas, as we speak, we have actually Hyundai Motors numbers that have come up on the screen. And that's looking like a pretty much okay set of numbers. A mild growth is what we're seeing on the revenue front. Margins more or less stable at around 14.3% or thereabouts. How are you approaching the auto space, Vikas? Plenty is happening, right? You have Trump's tariffs out there. You have reports of slowdown in parts of India as well. But some of these stocks have seen a big run. What do you like from it? The two-wheelers, four-wheelers, or would you play the auto ancillary stocks?
We've been playing, I think we own automobiles, so I think as public in our portfolio, we own Mahindra and Mahindra. We used to own Tata Motor, which we sold last year. But right now, I think, and then we are playing through some of the auto hanks. Other than that, I think we don't own, we own a little bit of Bajaj Auto as well. But I think auto story is an quite interesting story. There's no doubt on that. Tariffs don't make much impact on as far as India auto is concerned. I think as far as the cars are concerned, we have to see a little bit more on the competitive intensity coming about with a lot of new launches. So we have to this all individual company specific. How many models come? What kind of growth can come? But in general speaking, I think auto both four-wheeler and two-wheeler, generally directionally look good. Demand has been reasonably all right. But yeah, these are the large cap names, so you have to kind of take a little bit of, intermittent views as well. So we keep kind of increasing and decreasing position, but directionally speaking, we are positive in the sector.
Vikas, hi, good to have you on. So I want to talk about manufacturing because that's been one of your favorite themes for many, many years, right? Now, defense is obviously one part of it, and that's where manufacturing is working out beautifully. But what else should one be looking at in this environment? Because that whole China plus one story, it's still there, but I guess it's just very confusing because of what's happening with trade. And one day Mr. Trump says, don't make in India with respect to those iPhones. And you don't know what's happening to the chemical supply line. So therefore, what are the clear manufacturing plays that you see ahead, at least for the next 2-3 years?
One thing I must again say that I think one thing is very clear, Surabhi, from the recent past, that a lot of noise comes that goes away, right? These noises are not changing anything. None of these are going to change the long-term story of India, both in general and manufacturing in particular. Because I think if you just see all our growth drivers are in place, and each sector and sub-segment has its own growth drivers. And when we say directionally they are in place, does not mean that, they will have stupendous growth every quarter after quarter, year after year, right? There will be intermittent cycles. Like you mentioned, chemicals has been going through intermittent cycle, in the recent past. But again, there are two parts in the chemicals, also specialty chemical and, commodity chemical. Now, specialty chemical is where I think the real opportunity is from growth perspective. And there are companies which have been, I think, looking very, very interesting in that space, provided you can overlook the noise which is around. So again, you have to go back and look at the individual company and opportunity and assess them. I mean, we own a couple of them and we think that they are interesting, great stories. I mean, if you see SRF, when nobody wanted to buy one of our reasonably large holding, we bought it around 22,000-23,000 levels. And when, despite all this noise and all, stock has done reasonably all right. So again, it's not, you can't really broad brush. Directionally speaking, I'm again telling you, manufacturing across auto component, chemical, specialty chemical, garments, I mean, that's been doing very well. Capital goods, defense, electronics manufacturing across, there are lots of, opportunities. But of course, it boils down to the understanding the sub-segment and the company individual, because that determines the outcome.
For you, among all the different, various facets of manufacturing that you described, for you, what looks the most convincing at this point in time? And within chemicals, I know we're not going to talk too many stock names, but just to get the theme right, would it be fluorochemicals? Would it be, SRF is obviously very big in refrigerants. And likewise, if you talk textiles, so give us, a few more nuggets in terms of what in manufacturing are you most optimistic on?
I think whatever sits between import substitution, export oriented, right? And then the companies have more. So let's say in textile, more than anything, the garmenting is a very interesting opportunities. And with the BTS in place, I think you can see a little bit more growth coming through. But structurally, that's a very positive story. Similarly, in chemicals, I think right now, agrochemicals looks pretty interesting because I think while inventories have got cleared out, the demand is picking up. Agri prices have been reasonably robust across the board. So I think that segment, again, within that, few companies are looking very interesting. So again, the structurally all are positive, but there will be intermittent cycle, interesting opportunities coming about.
Okay. All right, Vikas, a great conversation as always. Thank you very much for joining in.
Thank you very much.
Okay, thank you very much for that. We will